Hello, welcome back again after not making video for a long time. Now I will present 4 things related to fulfilling the major assignment 1 for course English for Accounting. Okay, let's get started. Major assignment 1 English for Accounting. Introduction. Meeting someone new. There are 2 types, the full infinitive and the bare infinitive. The full infinitive, for example, we are pleased to meet the new head of our department. He waits for the vice chairman to arrive. The bare infinitive, for example, the manager made him do it. Help me introduce our new executive assistant. Making an offer, giving suggestion using what or how plus about plus verb ing. For example, what about calling the HR office tomorrow? How about giving more benefit to the workers? Offering some help. Sequence adverbs or adverbial sequence are signal words used to understand the order of a process or activity. They are followed by a comma. The most common ones are first or firstly, then, after that, first of all, next, and finally. Taking down information. The following expressions are commonly used when asking clarification on what someone else have just said. Pardon me, or I beg your pardon. I'm sorry, excuse me. Small talk. Take question or short question added to the end of a positive or negative statement. There are 4 take question. First, we use take question to ask for confirmation. Positive statement, snow is white. Negative take, isn't it? Second, take question with be. Negative statement, the food isn't delicious. Positive take, is it? Third, take question with do. For negative statement, she doesn't like English. Positive take, does she? For positive statement, she likes English. Negative take, doesn't she? And the last, take question with modals. For positive statement, she can speak English. Negative take, cannot she? Negative statement, he should not do that. Positive take, should he? Two, financial literacy. Vocabulary, revenue, what you earn. Expense, what you spend. Net profit, total revenue minus total expense. Net income, same as net profit. Depreciation, reduction in value over time. Appreciation, increase in value over time. Equity, ownership in a company. Vesting, earning equity over time instead of all at once. Asset, something you own that has value. Liability, something you own that has an obligation. Balance, the difference between credits and debit accounts. Spending money and debt. Some spending is inevitable and important, while others could be kept in check. Housing or utilities, food, transportation, retirement, education, healthcare, insurance, household supplies, savings, entertainment, personal care products, charitable donation, tax, and miscellaneous. Paying tax. We are taxed when we work and often taxed when we make a purchase. On April 15th each year, we mail in form showing what we've paid in local, state, and federal tax. Sometimes we get a refund because we've overpaid. Sometimes we owe more because we didn't pay enough. What kinds of goods and services does the government provide? Education, defense, welfare, consumer rights, disability, environment and health insurance, and other. Credit cards. The definition of credit is the borrowing capacity of an individual or company. You cannot borrow money without a credit history. Sometimes a lender will require a consignor. You build your credit history by borrowing money and paying it off, and paying bills on time. Positive from credit cards. You can buy something when you don't have the cash for it. Safer than carrying cash. Easier to use than a check. Helps establish credit. And negative from credit cards. Easier to spend money you don't have. Need to pay interest. Can charge an annual fee. Penalties for late or missed payment. Insurance. To protect yourself or your family against the financial impact of a tragedy. Different types. Health. Can cover everything or just hospitalization. Life. To help your family after you die. Should help with the lost income of the insured. Auto. Required by law. Helps when a car is severely damaged. Homeowners. Protects against natural disaster, fires, or someone who is injured in your home. Renters. Protects the item inside the house. Product on a specific purchase. Investing. Investing is the act of committing money or capital to an endeavor with the expectation of obtaining an additional income or profit. In other words, making money off the money you already have. Types of investment: stock, bonds, mutual funds, and others. Comparison. Three kinds of comparison: positive degree, comparative degree, and superlative degree. Positive degree is used to compare two things that are equal. The pattern: subject plus to be plus s plus adjective plus s, or subject plus verb plus s plus verb plus s. For example, my book is as interesting as yours. His car runs as fast as a race car. Their house is as big as that one. Comparative degree is used to compare two things that are not equal. The pattern for one or two syllables. Subject plus to be plus adjective plus er plus than, or subject plus verb plus adverb plus er plus than. For example, today is hotter than yesterday. Bill runs faster than Bob. This exercise is easier than the last one. The pattern for more than two syllables. Subject plus to be plus more plus adjective plus than, or subject plus verb plus more plus adverb plus than. For example, this red dress is more comfortable than the white. This year's exhibit is more impressive than the last year's. The book is more expensive than the one. Superlative degree is used to compare one thing with two or more other things. The pattern for one or two syllable. Subject plus to be plus the plus adjective plus est, or subject plus verb plus the plus adverb plus est. For example, John is the tallest boy in the family. He works the hardest employee of all the employees in this office. The pattern for more than two syllables. Subject plus to be plus the most plus adjective, or subject plus verb plus the most plus adverb. For example, that was the most boring film I have ever seen. Sally does the most gracefully of all the participants. Accounting statement. Income statement. The income statement, also called an earnings statement or a profit and loss statement, is an accounting statement that matches a company's revenues with its expense over a period of time. usually a quarter or a year. The components of the income statement involve a company recognition of income and the expense related to earning this income. Revenue less expense result in a profit or loss. The income statement is a flow measure statement, meaning that each value on an income statement represents the cumulative amount of that item through the given accounting period. Thus, the revenue on a first quarter income statement equals the cumulative amount of all sales during the first 3 months of the firm fiscal year. The revenue on the second quarter income statement equals the cumulative amount of all sales during the second 3 months of the firm fiscal year. The same applies to expense and therefore profits. This example of income statement. Balance sheet. The balance sheet is a summary statement of what a company owns and what a company owes at a specific point in time. It categorizes all of a company's resources as assets, liabilities, and owner's equity. This example of balance sheet. Asset. Within the asset segment, accounts are listed from top to bottom in order of their liquidity. That is, the ease with which they can be converted into cash. They are divided into current assets, thus which can be converted to cash in 1 year or less, and non-current or long-term assets, which cannot. Here is the general order of accounts within current assets: cash and cash equivalents, marketable securities, account receivable, inventory, prepaid expense, and others. Long-term assets including the following: long-term investment, fixed asset, intangible asset, and others. Liabilities. Liabilities are the money that a company owes to outside parties, from bills it has to pay to suppliers to interest on bonds it has issued to creditors to rent, utilities, and salaries. Current liabilities are those that are due within 1 year and are listed in order of their due date. Long-term liabilities are due at any point after 1 year. Current liabilities accounts might include current portion of long-term debt, bank indebtedness, interest payable, rent, tax utilities, wage payable, customer prepayments, dividend payables, and others. Long-term liabilities can include long-term debt, pension fund liability, deferred tax liability. Some liabilities are off balance sheet, meaning that they will not appear on the balance sheet. Operating leases are an example of this kind of liability. Thank you. Okay, those are 4 things that I present. Hopefully this is useful. Thanks for watching this video and see you.